Good morning, friends. Let's start writing the summary of the last class and then we proceed with the balanced set of areas. Right, question number 5. Question number 5. Question number 5. Point number 1. I'll get you the material in some time. SH and AH, SH and AH, SH and AH should be both, SH and AH should be both in terms of, SH and AH should be both in terms of man hours, should be both in terms of man hours, should be both in terms of man hours, in bracket number of hours into number of workers, number of hours into number of workers, number of hours into number of workers. Next point, according to the specification, the company should produce 1000 units in 40 hours. The company should produce 1000 units in 40 hours. 1000 units in 40 hours. Hyphen, this needs to be interpreted. This needs to be interpreted as 1000 units in 800 man hours. 1000 units in 800 man hours. 1000 units in 800 man hours, in bracket number of hours into number of workers. Number of hours into number of workers. Question number 6, no special adjustment. Question number 6, no special adjustment. Question number 7. Comprehensive problem for VOH variances. Comprehensive problem for VOH variances. Comprehensive problem for VOH variances. In case you want to revise VOH, you will have to go through that question. Question 9, comprehensive problem for FOH variances. Comprehensive problem for FOH variances. Question number 10, no special adjustment. Question 10, no special adjustment. Question number 11, overhead volume variance. Overhead volume variance is given in the question. Overhead volume variance is given in the question. And hence this would be interpreted. As fixed overhead variances. And hence this would be interpreted as fixed overhead variances. This would be interpreted as fixed overhead variances. Next point, calendar variance. Calendar variance is not asked in the question. Calendar variance is not asked in the question. Calendar variance is not asked in the question. And hence 4 columns need to be used. Next point, use the variances and get the missing information. Use the variances and get the missing information. and get the missing information. Question number 12. Question number 12. We need to first eliminate the semi-variable cost from the equation. We need to first eliminate the semi-variable cost from the equation. Eliminate the semi-variable cost from the equation. Hyphen 60% of semi-variable cost. 60% of semi-variable cost. 60% of semi-variable cost will be added to fixed. Will be added to fixed, and 40% will be added to variable. 40% will be added to variable. Next point. The problem has not given us complete information. The problem has not given us complete information. And hence efficiency variances are not asked in the question. Efficiency variances are not asked in the question. Next point. Put the given information in the computation table. And calculate the variances. Okay. Now then we'll proceed with sales variances. Till now we have done all other variances. Variable overheads, fixed overheads, everything got completed. Just a minute. So we have done till now on material, labor, all those variances are done. Today we'll move to sales variances. Now as far as sales variances are concerned, there will be two types of problem, that is single FG and multiple FG. Let's discuss them and then I'll tell you to note down the chart. Now when it comes to single FG, there are basically two components of your sales variances. Like for material we had price and quantity, for labor we had rate and hours. For this the two components are price and quantity, but we call it as budgeted price, actual price, budgeted quantity, actual quantity. This actual quantity is not what you see in material variances. This actual quantity refers to actual quantity sold. So budgeted price, budgeted quantity, actual quantity. There is no concept per se as standard quantity, because my standard sales, I don't have a concept called as standard sales which varies with my actual sales. You cannot have that concept, whereas you can have standard profit, standard cost. So the computation table will be BP into BQ, BP into AQ, AP into AQ. So these are the three things which will come in your computation table. BP into BQ, BP into AQ, AP into AQ. BP into BQ is technically called as budgeted sales. AP into AQ is technically actual sales. Now this part is called as price. This is called as volume. That's all. So sales price variance is equal to what? What is the formula? BP into AQ minus AP into AQ, the topmost part rectangle. So you are starting from here, BP into AQ, and subtracting the bigger rectangle AP into AQ. What is the formula for volume variance? BP into BQ minus BP into AQ. So the main variance is called as total sales variance, which is BP into BQ minus AP into AQ, split into sales price variance, sales volume variance. Price variance is the difference between BP and AP, BP into AQ minus AP into AQ. Volume variance is BP into BQ minus BP into AQ. Any doubts on this? The only important change is, if you get a positive answer here, it is adverse, and if you get a negative answer, it is favorable. The reason for that is, the formula has been arranged as budgeted sales minus actual sales. This is how the formula has been arranged by us. Now if budgeted sales is 2 lakh and actual sales is 2,40,000, the variance will show negative 40,000. So we may think it to be an adverse scenario, whereas in reality this is a favorable scenario, because you have sold more than what is required. Now the variances formula till now has been arranged in such a way that you get a positive answer when it's a favorable, you get a negative answer when it is adverse. Now the actual formula in fact is the inverse of this. It's AP into AQ minus BP into BQ. That's the real formula, rather than BP into BQ minus AP into AQ. But till now we have been used to using this formula. So in case you have control, you swap the formula. If you are not getting that control, then change the final answer, whatever it is possible. Either you swap the formula itself, because formula is AP into AQ minus BP into BQ. But sometimes people may struggle with swapping the formula, because till now we have learnt in one way. So at this point of time, swapping the formula can be a little difficult. You don't want to swap the formula, don't swap it, then swap the answer. But one of them has to be done. So you will start with this chart. From the chart you will get this computation table, and then from the formula. So start with the chart. This will be for single FG. BP into BQ, BP into AQ, AP into AQ is the computation table. Formula comes from the chart. The chart will guide you to the formula. Price variance is the topmost rectangle, which is BP into, sorry, it's in the topmost part, BP into AQ minus AP into AQ. Can you proceed? Any doubts on this? Okay, this is as far as single FG is concerned. If you have only one FG, you use this format. When it's multiple FG, nothing much changes. This side you will continue to have BP, AP, you will have BQ, AQ. This is the format we had used. In between, an item will come called as RBQ instead of RSQ. Everywhere we used to use revised standard quantity. Here it's called revised budgeted quantity. Computation table BP into BQ, BP into RBQ, BP into AQ, AP into AQ. These are the four things in my computation table, which is BP into BQ, BP into RBQ, BP into AQ, AP into AQ. These are the four things we will write in computation table. This part is price, together is volume. This is called as mix, as we interpreted in labor, in material, mix, and this is called as quantity. The first part is called as quantity, the second part is called as mix. What is the formula for sales mix variance? BP into RBQ minus BP into AQ. That last part of the rectangle, that's your answer. Sales quantity variance, BP into BQ minus BP into RBQ. Sales volume variance, BP into BQ minus BP into AQ. Sales price variance, BP into AQ minus AP into AQ. So the rectangle will take you to the formula, will take you to the computation table. Everything is going to come from the chart. So now the broad variances were total sales variance split into sales price, sales volume, split into sales mix, sales quantity. Just a minute. Okay, please do this now. Okay. Let's now do a problem on this. Okay, just note down few things. Point number one, BP refers to the price. BP refers to the price at which the company wants to sell. Refers to the price at which the company wants to sell FG. At which the company wants to sell FG. And AP refers to the price at which it is actually sold. AP refers to the price at which it is actually sold. Refers to the price at which it is actually sold. Next point, BQ refers to the quantity to be sold. BQ refers to the quantity to be sold. Refers to the quantity to be sold. And AQ refers to the quantity actually sold. AQ refers to the quantity actually sold. Next point, RBQ equal to total of AQ. RBQ equal to total of AQ in budgeted mix. RBQ equal to total of AQ in budgeted mix. Total of AQ in budgeted mix. Okay, now we'll start with the problem. There will be some changes to be done to the approaches, so you can leave maybe 1.5 side. I'll give certain extra theory for sales variances, so maybe leave 1.5 side and then we'll come back to that. Now let's move to question 13. A company actually sold 8,000 units of A and 10,000 units of B at rupees 12 and 16 per unit against a budgeted sale of 6,000 and 9,000. Standard cost, standard variable cost and actual variable cost are also given. Compute sales variances under all approaches. Company uses raw material X and Y to produce A and B. 2 units of X and 1 unit of Y is required to produce A, whereas 3 units of X and 2 units of Y company has consumed. Calculate standard quantity, actual quantity and revised standard quantity. Now, part 1 of the problem is on sales variances under all approaches. So there are going to be multiple approaches. What are those approaches? We'll discuss. First I'll do the total approach, then I'll give you the theory and I'll discuss on those approaches. Now, is it a single FG or multiple FG? Multiple FG. So let's open working note 1, calculation of sales variances under total approach. Calculation of sales variances under total approach. Calculation of sales variances under total approach. Now, this is how our chart looked. We had BP, AP, BQ, AQ, in between we had RBQ. So the computation table was BP into BQ, BP into RBQ, BP into AQ, and finally AP into AQ. So open these 4 columns. BP into BQ, BP into RBQ, BP into AQ, AP into AQ. What are the materials given in the question? A and B. A and B. BP refers to the price at which we want to sell. At what price do we want to sell product A? 14 and 13. A and B is 14 and 13. Fill it at 3 places. We want to sell the product at 14 and 13. BP refers to the price at which we want to sell, which is 14 and 13. AP refers to the price at which is actually sold. At what price have we sold it? 12 and 16. 12 and 16. AP refers to the price at which it is actually sold. BP refers to the price at which we want to sell. 14, 13, 14, 13, 14, 13, 12, 16. AQ refers to actual quantity sold. How much is that? 8,000 and 2 places. 8 and 10. 8,000 and 10,000. and 10,000. Leave some 3 lines. Point number 1, calculation of RBQ. Calculation of RBQ. Below that, total of AQ equal to 18,000. Total of AQ equal to 18,000. 8 plus 10, 18,000. Total of AQ equal to 18,000. Split that into 2. Now there would have been a budget given. What was the budgeted quantity they wanted to sell? 6,000 and 9,000. This needs to be split in the ratio of 6:9. It has to be split in the ratio of budgeted mix, which is 6:9. 6,000 is to 9,000. Split in the ratio of 6:9. $7,200 and $10,800. Split in the ratio of 6:9. Clear? Now, as far as sales variance is concerned, the BQ will be mostly readily available. Any other variance, you have to calculate SQ, SH and all. Here, no calculation. This will be into 6,000, 9,000. Into 6,000 and 9,000. $241. You know the formula. Formula will come from the chart. Apply the formula, get to the answer. வேணால் பாருங்கள், ஏன்னா எனக்கு வந்து கொஞ்சம் 10 நோட் எடுத்து 10 இல்லை நான் பார்த்துட்டு தான் நான் சொல்கிறேன். நீங்கள் 10 Let me know in case there's a doubt anywhere there. Any doubts in the variances? The entire formula is going to come from the chart. Chart is the only thing which you need to know. Any doubts in this? Clear? Can you proceed? Any doubts? If you get a positive answer, it's favorable. Negative answer, it's adverse. Or swap the formula, whatever way you are comfortable with. Now go to that space, leftover space. Sales variances margin approach. Sales variances margin approach. Sales variances margin approach. Point number 1. Total approach will not find the impact. Total approach will not find the impact. Will not find the impact on the profits of the company. Will not find the impact on the profits of the company. On the profits of the company. Full stop. This is because increase in sales. This is because increase in sales by 55,000. Some random number, I have just given the number to this question. This is because increase in sales by rupees 55,000 will not lead to increase in profits by rupees 55,000. Will not lead to increase in profits by rupees 55,000. Now in this question, the budgeted sales was 2,01,000, actual is 256. More 55,000 sales does not mean more 55,000 profit, because you have also increased the quantity. When you increase the quantity, your cost will also increase. Next point, margin approach. Margin approach can help in finding out the impact of variation in sales. Impact of variation in sales on the profits of the company. Variation in sales on the profits of the company. Next point, following changes will be required under margin approach. Following changes will be required under margin approach. Changes will be required under margin approach. Point number A, BP will be replaced with BM. BP will be replaced with BM. And AP will be replaced with AM. AP will be replaced with AM. Next point, sales will be replaced with sales margin. Sales will be replaced with sales margin in the nomenclature of the variance. Sales will be replaced with sales margin in the nomenclature of the variance. That is basically your name of the variance will undergo a change. Now when I do under margin approach, the names will be total sales margin variance, sales margin price variance, sales margin volume variance, sales margin quantity variance, sales margin mix variance. That's one thing. The major changes, your BP and AP is replaced with BM and AM. Now in that, listen for some time and then I'll tell you to note down. Margin approach. In margin approach, we'll first do absorption costing. And then I'll do marginal costing. A broad overview of absorption costing you could have learnt at IPCC level. I'll be doing a detailed discussion on this when I do marginal versus absorption later on. So in marginal costing, in margin approach, the first way of doing is absorption costing. Now in this, BM is equal to budgeted margin is equal to, margin is basically profit, budgeted price minus budgeted cost. BM is equal to budgeted price minus budgeted cost. So you will not write budgeted price in the question, you are going to write budgeted margin, which is budgeted price minus budgeted cost. AM is equal to actual price minus actual cost is not applicable, it is minus budgeted cost. Be very careful about this aspect. Your actual margin is actual price minus budgeted cost. Why it is not minus actual cost is, any variation between budgeted cost and actual cost will be material, labor, variable overhead and fixed overhead variances. So that will go to that place. When it comes to sales, they are responsible only for this part. You cannot make them responsible for the cost part, because suddenly I am increasing the selling price but you end up increasing the cost and I cannot be held responsible for that. I am only responsible for the price side, I am not responsible for the cost side. So sometimes what will happen is, the company will say we have to sell the product at 20 we have to sell the product for 20 rupees and the sales manager may sell it for 24 rupees. Now it's a good job by him, you will have to appreciate him for this. But what will happen is, the cost was 10 and this time it is 15. So your budgeted margin actually, not standard costing wise, 10 and this is 9. Now we may conclude saying that sales is not doing good, or there is some problem with the variances or some problem with the sales team, because if I go by variance analysis. So what variance says is AM is equal to actual price minus budgeted cost. You will have to subtract budgeted cost. Clear? Any doubts on this? Do this now. Budgeted price minus budgeted cost, actual price minus budgeted cost. Be very careful about that. Now then, margin approach, marginal costing. Margin approach, marginal costing. We have something under absorption costing. We also have something under marginal costing. So totally three ways of doing sales variances: total approach, margin approach, absorption costing, margin approach, marginal costing. Now here it's very simple. BM is equal to budgeted price minus budgeted variable cost. Not all cost, you subtract only variable cost, because here you go by a concept of contribution. And AM is actual price minus budgeted variable cost. Actual price minus budgeted variable cost. We go by the concept of only variable cost. We do not consider all cost. So you can write budgeted margin equal to budgeted price minus budgeted variable cost. Budgeted price minus budgeted variable cost. And it's actual price minus budgeted variable cost. Clear? Now we'll proceed with this to the question which we are doing. Any doubts on this? Now let's do first under absorption costing. Next, the problem which we were solving. marginal cost, sorry, margin approach hyphen absorption costing. Let's first do the absorption costing part and then we come to the marginal costing part. Margin approach, absorption costing. Now the table which we earlier wrote was BP into BQ, BP into RBQ, BP into AQ, AP into AQ. Wherever BP is there, write BM. Wherever AP is there, write AM. So the formula table will become BM into BQ, BM into RBQ, BM into AQ, AM into AQ, BM into BQ, BM into RBQ, BM into AQ, AM into AQ. Leave some 4 lines. BM equal to what's the formula for BM? Budgeted price minus budgeted cost. Now one more thing, whenever you do problem under margin approach, they purposefully will give you the actual cost in the question. Just ignore it, that's all. That actual cost is an information which is of no use to do sales variances. Even if they give, we just need to ignore that information because in a hurry you may make a mistake on that front. So BM, budgeted price minus budgeted cost. A is equal to, what is the price at which you wanted to sell A? 14 minus what is the budgeted cost? The standard cost of A and B are 8 and 10 respectively, and that corresponding actual cost, just ignore it, that's all. You're not going to even look at that information. When you solve a problem, don't even look at that information, because if you look at, you will end up making a mistake there. So 14 minus 8 equal to 6, 13 minus equal to 3, 14 minus 8 and 13 minus 10. BM equal to budgeted price minus budgeted cost. Then AM equal to actual price minus budgeted cost. Actual price minus budgeted cost. Actual price is 12 and 16. So 12 minus 8, and we have 16 minus 10. Let's not even look at what is actual cost. That's an information which is irrelevant to the question. It's an irrelevant information for us. Clear? Any doubts on this? Now let's capture this in the main working note. Any doubts on 6346? See, BQ, RBQ, AQ, AQ, copy paste from the earlier calculation. That's going to remain same. What changes is this? Now be it total approach or margin approach, your sales price variance will be same, because change in price is equal to change in profit. So whatever is the change in price, that will be the exact change in profit. So that variance alone will remain same. Other variances will obviously undergo a change. What is the total of the first column? 63,000. 70? 600. 78,000. 92,000. So your TSMV, total sales margin variances, 29,000 favorable. SMPV, sales margin price variances, 14,000 favorable. Earlier also it would have been 14,000. Your price variance is going to remain same under total approach or margin approach. SMVV is 15,000 favorable. SMQV is 'Can you proceed to marginal costing part? Any doubts on this? This was absorption costing approach. I'll proceed to marginal. Any doubts on this? Anybody has any doubts on this? Next, margin approach hyphen marginal costing. Margin approach hyphen marginal costing. Margin approach hyphen marginal costing. Hyphen marginal costing. Same columns, BM into BQ, BM into RBQ, BM into AQ, AM into AQ, BM into BQ, RBQ, AQ, and AM into AQ. BM into BQ, RBQ, AQ, and AM into AQ. Come down. BM equal to budgeted price minus budgeted variable cost. BM equal to budgeted price minus budgeted variable cost. Budgeted price minus budgeted variable cost. The budgeted price is 14, 13 and 7, 9. 14 and 13 minus 7 and 9. 14, 13, 7 and 9. Any doubts on BM? 14, 13 and 7 and 9. AM equal to actual price minus budgeted variable cost. Actual price minus budgeted variable cost. Actual price is how much? 1216. Seven, 4, 5, 7. That's all. You fill it in the table, you will get to the solution. $78,000, 93,600, 96. Your SMPV will remain same, be it a margin approach, total approach, absorption costing, marginal costing. Everywhere change in price is equal to change in sales, change in profit, change in contribution. So that is going to remain same. All other variances will undergo a change. TSMV is 32,000 favorable. SMPV is 14,000 favorable. Done? Any doubts on this? So it can be either under total approach or margin approach. Later on when I do reconciliation of profits, I need it only under margin approach. We cannot do it under total approach. We'll have to do only under margin approach. For reconciliation purpose, it will be only under margin approach. Either marginal or absorption costing, that we'll understand later which method to use. Can we proceed? Any doubts? Now let's move to the next question. Can we proceed? Okay, compute the missing data indicated by the question marks from the following: standard sales quantity, actual sales quantity, standard price, actual price, sales price variance, sales volume variance, sales value variance, sales mix variance. Okay, let's complete the second part. The company uses raw material X and Y. It's going back to your material variances. Uses raw material X and Y to produce A and B. 2 units of X and 1 unit of Y is required to produce A, whereas 3 units of X and 2 units of Y is required to produce B. Company has consumed 50,000 units of X and 20,000 units of Y. Calculate SQ, AQ and RSQ. Listen for some time. I'll tell you when to note it down. They've asked for SQ, RSQ, AQ. The two raw materials are X and Y. How many units of X has been consumed? 50,000 and Y is? So AQ is 50,000 and 20,000. The trickiest part is RSQ, so that's where I have given this adjustment 50 and 20. SQ is always calculated with the help of actual output. How many units of A has been produced? A, how many units of A? Earlier part. 8,000. Assumption is whatever you produce is sold. So 8,000 units of A has been produced. How many units of B were produced? 10,000. Now listen. To produce 1 unit of A, how many units of X are required? To produce 1 unit of A, how many units of X is required? 2 units of X. How many units of Y is required? 8,000 into 2, 8,000 into 1. To produce 1 unit of B, how many units of X is required? 3. How many units of Y? 2. So your standard quantity is always calculated with the help of actual output. This is how we will do it. 8,000 into 2. Why 8,000 into 2? 8,000 units have been produced and each unit needs 2 kg of or 2 unit of product X. 10,000 into 3. Why 10,000 into 3 is each unit requires 3. Any doubts on this? Now SQ is done, AQ is done. My question is RSQ is total of AQ in standard mix. Now the problem is you see multiple mix in the question. One mix says 2 units of X and 1 unit of Y. Then you also see 3 units of X and 2 units of Y. It's total of actual quantity in standard mix. The mix is 2:1, 3:2. 2 mix are given. How do we proceed? Which computation table? Okay. Now what you see here is the weighted mix. Okay, this is what you will take. You will take this mix because this is the weighted average of your 2:3 and 1:2 you see in the question. The weighted average of the mix is here and this is what will be used to calculate RSQ. This is the only adjustment which I wanted to explain. So when you have multiple FG and multiple raw material, you don't know what mix to use itself because your raw material, one product will be 1:4, second product will be 3:2, third product can be 2:1, fourth product can be 5:4. Now with so many mix being there, what do I use? To identify that, you calculate SQ. That SQ is always calculated with the help of actual output. Post calculating the SQ, you see the mix as 8,000 into 2 plus 10,000 into 3, which is 46,000, 28,000. So the mix to be used in this question is 46:28. It's not 2:1. It's not 3:1. The mix which you are going to use in this question is 46:28. Your RSQ is the total of AQ, which is 70,000 in the ratio of 46:28. Clear? Any doubts in this? You'll have to use in the ratio of 46:28. Do it now. SQ, RSQ and AQ. Do it. SQ is anyway calculated with the help of actual output. It's neither 2:1 or 3:1. It's a mix of that, which is 46:28. So your RSQ is 70,000 into 46/74, 70,000 into 28/74, split in the ratio of 46:28. Forty-six by 74 and 28/74. Forty-six by 74 and 28/74. Can you proceed? Okay, let's move to this question. Now, they have given two products in this question, product R and S. The first thing which we need to find out is whatever the variance is given, is it total approach or margin approach, because my formula undergoes a change based on that. These are under total approach or margin approach. The variances given in the question are asked to be calculated. Total approach. If it's margin approach, they will use in brackets the word called as profit or margin, or they'll say sales margin, sales volume in bracket profit, somewhere something would be referred. Now there is no concept called as standard sales quantity, okay? It's only budgeted sales quantity. They keep interchangeably using it. There's no concept called as a standard quantity. I cannot calculate saying that my standard quantity based on what? You don't have anything. So there's no concept per se on standard sales quantity. Indirectly they are saying that is budgeted quantity, and this is budgeted price. So let's capture the information with the variances. We may get something and then complete the table and answer whatever is asked. Working note 1. Sales variances. Sales variances. Single product, multiple product. Multiple product, open 4 columns. The two products are R and S. Whatever information is available, let's capture it. Not available, we'll see what to be done. BP is 3 places. $12 and $15. AP is 15, 20, 15, 20. AQ 500 for product R. Let's leave the other product for the time being. 500. BQ is available for product S. This is what is available as of now. Clear? Can we proceed? Now, they have given some variances in the question. You have sales volume variance for product R. Think about the formula and tell me what is the formula for sales volume variance. BP into BQ minus BP into AQ. We will use that formula. I will get the BQ of R. Now please listen, one critical thing. 1200 favorable means minus 1200. 1200 favorable is minus 1200. So let's write sales volume variance, SVV equal to BP into BQ minus BP into AQ. BP into BQ minus BP into AQ. SVVR, you can write subscript as R. SVVR equal to BP into BQ minus BP into AQ. The sales volume variance of R is 1200 favorable, which for our purpose is minus 1200. Minus 1200 is equal to Any doubts on 400? Clear? Can we proceed? Can we? Okay. Next, I have only one variance in the question, which is mixed variance. What is the formula for mixed variance? BP into RBQ minus BP into AQ. Now, I have for both the products together, both look incomplete. I don't have BP into RBQ also. I also don't have BP into AQ. How do we proceed?
Let's take X as AQ's S and
Okay, yeah.
1 is to 1 is to 1.
So what you will do is, for whatever I have done when we did material variance, so the same kind of an adjustment, you will take this as X. The moment you take this as X, the total of AQ is X plus 500. The total of AQ is X plus 500 and RBQ is X plus 500 in the ratio of 1 is to 1. Why 1 is to 1? 400 is to 400. So it will come in the ratio of 1 is to 1. So indirectly what will become is, this will be X plus 500 by 2. This is going to be X plus 500 by 2. So RBQ of R is X plus 500 by 2. RBQ of S is X plus 500 by 2. Both are X plus 500 by 2. Other products are 500 and X. Now do BP into RBQ minus BP into AQ. You will get the X. The moment we get it, the problem is almost over. The moment we get that, the problem is almost over. Next. Now right, let us assume AQ. Let us assume AQ of product S. Let us assume AQ of product S. AQ of product S to be X. AQ of product S to be X. AQ of product S to be X. Now write total of AQ equal to X plus 500. X plus 500, split it into 2. RBQ of R, RBQ of S. RBQ of R, RBQ of S. X plus 500 by 2, X plus 500 by 2, 1 is to 1. X plus 500 by 2, X plus 500 by 2. No, so how do we proceed is, we look at the variances which are there. No, so I had both the variances. I could have started with mixed variance. Let's assume when I start with mixed variance, I would have assumed this as X, but I don't know the mix because this 400 is computed later on. So you will see whatever you start with a variance. See, basic thing is, in one variance you will have a formula. In that formula, one variable should be available, the other should be missing information. So when we did volume, we had 12 into 500, but we didn't have 12 into 400. So then I can compute 12 into 400. One information should be available, second should be missing. Which R? Both, na? Both put together. 12, 15 only I have taken, no? Are you getting a different answer? Any doubts on 800? Clear? Can we proceed? Any doubts on 800? Now please listen. If you have not written like x plus 500 by 2, then you can place the figures there. Otherwise, recreate the computation table. If you have written x, then recreate the computation table. If you have not written x there, then instead of x, you can write down those figures. So this was 800. This will be 650, 650. 500 plus 800 in the ratio of 1:1. If you have noted it as x, then please recreate the table and write this. The moment the computation table is done, the problem is almost over for us. 12 into 650, 15 into 650, 12 into 500, 15 into 800, 15 into 500 and 20 into 800. Clear? Can we proceed? Now let's look at those question marks and keep answering those question marks. Any doubts till now? Now write standard sales quantity of R equal to, standard sales quantity of R equal to, we have already computed, what is that? 400. Standard sales quantity of R equal to 400. Actual sales quantity of S equal to how much? 800. Actual sales quantity of S equal to 800. Then SPVR, calculate for product R. SPVR, sales price variance R. SPVR equal to, what is the formula? BP into AQ minus AP into AQ. Positive, favorable, negative, adverse. BP into AQ minus AP into AQ. BP into AQ minus AP into AQ. SPVR, SPVS. Sales value is basically total sales variance. It will come from the formula. In case there is a doubt, let me know about it. Apply the formula and get it. Let me know in case there are doubts. Can you proceed? Okay. Can I move to question 15? Now, these are the type of questions which whatever I'm going to discuss now. Till now we have done all computation related questions. Now what we are going to see is interpretation related information. This is extremely critical from new syllabus point of view, because logically more questions should come from case study type of problems, from interpretation type of questions. So that is what ideally should get tested in exam. Basics whatever we have done till now will help us in calculating some computation. So any case study which comes in areas like standard costing or marginal costing, at least half of the marks will be for computation related areas. So that's what we have learned till now. Whatever we have learned is how to compute various type of variances which may be required to start the problem. To kickstart a problem, I need some computation to be done. So because of that only we have learned. State possible impact on variance in each of the following independent situation. They are saying this is what has happened. More units were produced than was budgeted. Now this can lead to what they are asking. Any variance, and is it favorable, adverse? You know, from material, we had material 5 different types of variances: material price, material usage, material mix, material yield, material cost, labor rate, labor efficiency, variable overhead so many breakup, fixed overhead so many breakup, sales so many breakup. More units were produced than was budgeted. Favorable what? Value what? Favorable? Which value? No, favorable sales you are saying. No, it's not sales. Total value. No, in sales, no. No, it's not in sales. This variance is not going to impact the sales. No. So what variance? You tell me a variance name and tell me favorable or adverse. I don't want you to tell me what would have happened. Tell me the variance name. It's not favorable total sales variance. Which, no, mix is not going to even come here. Total? Why variable overhead will be impacted here? More units were produced than was budgeted. I have produced which volume variance? Okay, it's fixed overhead volume variance which will be favorable. Why sales? I said no, because it only said more units were produced than was budgeted. I am not sure whether it is sold or not. If it is sold, then favorable sales volume variance, only volume, not total, because total will depend on price movement also. So if it is sold also, then it is favorable sales volume variance, but fixed overhead volume variance will obviously be favorable. Fixed overhead, why cost and all, material cost and all cannot come into picture? Because it is more units are produced. Then I'll have to see SQ. SQ again will be calculated with the help of actual output, which will go up. SQ will go up. You will have to compare with AQ. So I don't know whatever it is. So why this information is critical is, or why this interpretation is critical is, some problem they'll say interpret the variances. You will calculate the variance and find that there is a favorable volume variance. Now favorable volume variance, you will write the favorable volume variance can be because of XYZ reason. Reason 1, the company has produced more number of units than it has budgeted for. The more number of production is because laborers are more efficient, if you see favorable efficiency variance. The more number of units is because the company has a favorable capacity utilization, if you see favorable capacity variance. Or if you see a calendar variance, then you'll say the more number of units is because the company has worked for 20 days as compared to a budget of 18 days. That is what is critical now. Your criticality at this stage is not computing variances. You have to go to the stage where you interpret the variance. For example, when I would have done this question, we would have got the variances. Can you tell me the variances for question number 10? Fixed overhead variance answer. Cost, volume, expenditure, capacity, efficiency, calendar. Question number 10. For fixed overhead, cost 200 favorable, volume, okay, expenditure 200 adverse, capacity, efficiency, calendar. Now, if somebody asks me to interpret the variances here, I'll say the company has a favorable fixed overhead volume variance of 400 favorable. This is because, point number 1, the company has a better capacity utilization. It wanted to work for XX hours, whereas it has worked for YY hours. Because of a better capacity utilization, the company could produce more number of units, and that led to a favorable variance of 96 favorable. Next, the company wanted to work for 50 days, whereas it has worked for 54 days. Because of this, the company could increase its production, and this led to a favorable calendar variance. However, these improvements could not lead to could not fully translate into volume variance because the workers were inefficient. The inefficiency of the workers has cost the company XYZ units, leading to an adverse variance of 80. This is what is critical now. Your criticality is not calculating variances at new syllabus level. It may not be only calculation of variances. Calculation is critical in a problem. Maybe 50% marks or even 75% marks could be for calculation orientation, but interpretation is going to become critical. You need to go behind the number and find what can be the reason behind it. So that is where we are doing this question. Anyway, this question is, whatever I am doing is part of old syllabus also. Now, careless handling of material by production personnel. What will happen because of this? Careless handling of material by production personnel. Which one? Variance. Yeah, tell me the variance name. So your answer should be adverse / favorable and the name of the variance. No, not material cost variance. Adverse material usage variance. It will be adverse material usage variance. Why material usage? You will use more raw material than what you need. You will use more raw material than what. So first one is right, favorable fixed overhead volume variance. The first one answer is favorable fixed overhead volume variance. I need the name of the variance and favorable or adverse. Favorable fixed overhead volume variance. Second one is adverse material usage variance. Adverse material usage variance. Which one? Why favorable you are asking? Because when you produce more number of units than you budget for, you have a better recovery of fixed overheads. So fixed overheads would want you to produce as many units as possible. Now the second part, what we have written, adverse material usage variance. The next level of interpretation, please listen. it can also lead to, I'm not sure whether institute has taken, but it can also lead to adverse labor efficiency variance. It can also lead to, not sure on it. Why it can lead to adverse labor efficiencies? When you are doing some careless handling of material, some of the material may get scrapped. When it gets scrapped, your production gets scrapped and you start from the scratch. You again start from the scratch. Maybe, not very sure on it, but this is something which is maybe. So as of now, we'll see the institute answer in some time. You can as of now just write material usage variance. Purchase of inferior quality material. Why will it be adverse? Lower quality, lower price. It will be favorable, no? When you buy an inferior quality material, you are obviously going to pay a lower price to it. So the impact in this case is going to be favorable material price variance and adverse material usage variance. Why adverse is that product is not going to give you the production which you need. The product is an inferior quality product. Lot of rejections can come in. From a price point of view, it has to be favorable. When I'm buying an inferior quality material, I wanted to buy a 10. I will pay 8 rupees and buy, then only it's inferior quality. I'm not going to pay 11 rupees and buy a inferior quality material. So material price has to be favorable. It would ideally get compensated or offset by your adverse material usage variance. Why adverse? Because you are not going to get the production which you need. So favorable material price variance and adverse material usage variance. Favorable material price variance and adverse material usage variance. New competition entered the market. Favorable, adverse. You keep telling me that. Adverse. One adverse sales price variance is an obvious impact of it. A classic example is Jio entering the market. When Jio entered, every other people reduced their prices. So adverse material price variances, adverse sales price variance is certain. It can also lead to adverse sales volume variance if I'm not able to still reduce, after reducing the price also, I'm not able to continue selling the volume. So when competition comes in, high probability price will come down. Moderate probability volume will also come down. High probability price is going to come down. There's a moderate or a low probability that volume can also come down. So you can write adverse sales price variance, adverse sales price variance and adverse sales volume variance. Adverse sales price variance and adverse sales volume variance. Now one more thing, when you do a problem, you are not certain about it, you will not write adverse sales volume and adverse sales price, you will write adverse sales volume variance. This is because we expect that the company will have to reduce price to counter competition. It will also lead to adverse sales volume variance because of the new competition. We believe that the company, so you write your explanation, at least I understand your thought process. Whether it is right or wrong, it's a different story altogether. Because when I give some information, your answer can be different, my answer can be different, but I will have a logic for my answer, you will also have a logic for your answer. If the logic is something which makes sense, then both the answers are correct. If your logic is something which makes sense, because you will have your own logic of saying that it is going to happen because of XYZ reason. Different people can think in different ways, perfectly fine. A logic is what is very critical. So if you have a logic behind your answer, that's more than enough. Clear? Next, new suppliers were used. Favorable material price variance. That's what I also thought to be. I think institute has used adverse material price variance. We'll see institute answer. I think that's what institute has used. Why favorable material prices? I'm going to shift to a new supplier because he can give me a lower price. Institute assumption will be you shift to a new supplier because he gives you a better quality. When he gives a better quality, obviously you will have to pay a better price. So the way in which you interpret can undergo a change. I think institute's interpretation was that you may have to pay a higher price to shift to a supplier. Normally, in 80% of the time, you will shift a supplier because of price. In practical world, there will be a lot of companies which are quality conscious. Those people will shift because of quality. If you are shifting because of quality, it will be an adverse price variance. If you are shifting because of price, it's going to be favorable price variance. So it can be favorable material price variance / adverse material price variance. Favorable material price variance / adverse material price variance. Now it doesn't end here. The moment you bring in a new product, my workers may start struggling a little bit with that. My workers will start struggling a little bit with it because you are used to one way of raw material. When you are used to that raw material, you get it, process it, pass. Get it, process it, pass it. So whenever you change anything in a manufacturing process, high probability that your production will get impacted. At least small impact will be there. Because of this, there can be an adverse labor efficiency variance. There can be, the logic behind this is my workers are used to, so when you take your articleship example itself, you are used to preparing an audit report in one manner, let's assume. When you keep preparing the audit report in that same manner, you are used to it, you will keep producing it in the same manner, it will take the same amount of time. The moment MCA comes with a new audit report, or in income tax they come with a new form, when they change the form, it takes you some bit of time to adjust to it. So new income tax form come in, it will take some point of time to get used to it. So raw material is like an income tax form for us, because that is what you use and you get your output. So raw material is something which is used, and so when something changes, most probably in your case it's easy to understand. When I change an income tax form, obviously there is going to be a drop in efficiency initially. That's in fact easy to understand. From a manufacturing point of view, may or may not be. Why may not be? If that product is directly going to go through the manufacturing process and labor is not going to do anything on it, it may not impact. If labor is going to do something on it, it may impact. So you can also write adverse labor efficiency variance. Can be. That's because of the quality. That's why. So there are different. See, the only thing is, if you are able to think through all of this, it's easier to interpret and variance. So normally one favorable and one adverse will always be linked with each other. When I say, if you have a favorable material price variance, you will have an adverse material usage variance. Why? Because you have bought an inferior quality raw material and your usage got impacted. If you have a favorable material usage variance, you will high probability have an adverse price variance. Why? Because you bought a superior quality raw material by paying a higher price, but that lead to better productivity. I will pay more to my laborers, adverse rate variance, but they are becoming more efficient, favorable efficiency variance. I have started paying less to my laborers, favorable rate variance, but they are not efficient now because they are not happy with the company. So one favorable and one adverse is normally interlinked with each other. So whenever we do an interpretation, any problem you do an interpretation, the best thing to have is one favorable and one adverse. It's easy for us to proceed. The issue for us will come if we have both favorable or both adverse. Then we'll have to think about a possible interpretation and get to a solution. One favorable, one adverse is easy to build a relationship. If you have favorable price variance, inferior quality material, you have got impacted on the productivity. Superior quality material, you get impacted on the price but get saved on the productivity. Somewhere you will have a benefit. So it's always this way only. Either you compromise on price or you compromise on productivity. Compromise on labor rate or compromise on efficiency. You will have to keep doing that way. New production staff was recruited. Which one? Adverse or favorable? Think about it. In your office, you bring a new article assistant. Will he be more efficient than you or less efficient than you? He's obviously going to be less efficient than you. When a new person comes in, his efficiency is going to be lower. So In a problem, when you get an adverse labor efficiency variance and you're not able to think about an interpretation, one of the interpretation will be, this could be because the company has recruited more workers and these workers are initially inefficient, or these workers are under the training period and they are taking time to improve their efficiency level. So adverse efficiency, adverse price, both can happen when I've recruited more number of people by paying a better price, but these people are taking time to improve their productivity. Most probably in the coming months the productivity will improve and that will lead to a favorable scenario. So when you recruit a new production staff, that is straight away an adverse only. It will be only
Existing employees were not efficient, so we recruited new employees.
let it be. So still when you bring that new employee, you can remove your existing employee, but that new employee's productivity is going to be lower than existing employee at least for 5 days, 10 days, 15 days, whatever be the period. Because you can think about when you started your articleship, at that point of time, initial 1 month, you don't know anything to do. You keep learning. It takes time for you to learning. So anybody who comes in an audit firm now, as compared to a person who has a 1 year experience, he can be still inefficient. With the 1 year experience, his speed of working will still be better than a newly joined assistant. That is a normal scenario. Exceptions can be there, but in a normal scenario, a newly joined person is going to take more time. So you will write adverse labor efficiency variance. Last part you can write the answer, you will understand later market share part. You can write adverse market share variance. There is a variance like this. Adverse market share variance. Adverse market share variance. Okay, this is what institute has done. Let's see whether we were in that direction. First one is favorable fixed overhead volume. Second one, adverse material usage. Adverse usage, favorable price. New competition, we wrote both adverse price as well as adverse volume. Institute has restricted itself to adverse price. New supplier, they have restricted to adverse material price. What did we write? We wrote favorable material price. So institute has taken an interpretation of adverse material price. The institute's interpretation is because you are buying a better quality product. When you are buying a better quality product, that's why I said no. Every answer, see, when I write my answer, I have a logic behind it and I can justify my answer. What I would practically need is thinking about a variance and thinking about various possibility, and then we see exactly what is happening. Say, I'm in a ratings industry, so when I look at financials, I look at different industries, how the financials have moved. When revenues go up, I have my own hypothesis saying that point number 1, the company could have opened a new branch. Point number 2, the company could have got a new customer. Point number 3, the company could have reduced its prices. Point number 4, the company could have started exports. So I have my own different reasons, and then I see what is the right reason for the given company. Maybe they have reduced price. If they have reduced price, I go to the financial and see whether the profit margin has come down. Because you have reduced price, your profit margin should come down. So you try to link various possibilities. So there are various possibility of something which happens in a company. You look at that possibility and then get to the solution. New suppliers were used, adverse price. New production staff, adverse labor efficiency. Market share is adverse market share variance. Clear? Any doubts on this? Any doubts? Now let's go to the next question. Go through question 16. This is also part of old and new syllabus both. Go through question 16. Okay. Natural Spices manufactures and distributes high quality spices to gourmet shops and top quality restaurants. Gourmet and high end restaurants pride themselves on using the freshest, highest quality ingredients. Natural Spices has set up 5 state of the art plants for meeting the ever growing demand. The firm procures raw material directly from the centers of produce to maintain uniform taste and quality. They've given the process. The following variances pertain to last week of operation arose as a consequence of management decisions to lower prices to increase volume. Identify the critical success factor for natural spices. Now, what is critical success factor is the factor which can influence the success of any organization. For example, in Bharadwaj Institute, when we take classes, the critical success factors can be pass percentage of the students. In case the pass percentages are better, then that is one critical critical success factor for us. Another CSF can be student satisfaction. There could be a way of measuring the student satisfaction. So we put it on a scale of 10, we get your satisfaction levels, try to understand how satisfied are students with us. So there are different parameters which are critical to the success of an organization. Most of the manufacturing companies, the major critical success factor will be 4 things: price, quality, delivery, support. Price, quality, delivery and support. A supermarket's critical success factor can be that he can provide delivery at your home. He can provide delivery at your home. An organization like Lenovo, the critical success factor could be on-time customer support. You call him, you have any issues, he comes to your premises in 5 minutes. He comes to your premises in 2 hours. He is able to provide you that services in 2 hours. Some of the products, your critical success factor could be based on the quality of the product. See, it's in net what a customer wants. Some customers would want a better price, some customers would want a better quality, some customers would want a better delivery, some customers would want a better support. So these are the normal 4 things which we look at: price, quality, delivery and support. Net my success will depend on my customers. My customers have to be very satisfied. So in case of Bharadwaj Institute, students have to be satisfied. Now that satisfaction can come from price, can come from quality, can come from delivery, can come from support. So when I say support, at any point of time you have a doubt, the faculty is available to clarify your doubt. So that could be one way of understanding the support angle. Price, basically price refers to the fees which we charge from you. So you would want it to be an affordable price. Quality can be measured in multiple ways. Whether is there 100% coverage of the syllabus? The question paper which finally turns out, is it broadly in line with what we discuss in the class? The kind of pass percentages which come from the institute. So there are different ways of measuring. Now in this case, natural spices, what will be the critical success factor? It is quality product. So it has to pride themselves on the quality of the product. So what my customer needs here is quality of the product. They are not to a great extent bother about price. If you can ensure quality, you may pay a premium for it. Example, Apple phones. So if the quality is ensured, they are ready to charge a premium and customers are ready to buy it. It is different people will have different strategies. So there will be few set of people who will focus on price, few set of people who can focus on quality. So in this case, the critical success factor is going to be quality. This is what they want. Now depending on the marks given in the question, you may write little more explanation or a smaller explanation depending on how the scenario. So you may write it like this: Natural Spices has been supplying its product to the customers like gourmet food shop and top quality restaurants. These customers would want to have a freshest and highest quality ingredients for that product. Hence quality of the final product will be the critical success factor for natural spices. Now you say quality is your focus. Now look at the variances and tell me, is quality the focus? Favorable volume variance and adverse price variance indicates what? They have reduced the price to increase volume. At least it doesn't go in line with the quality product. It doesn't go in line with a quality product because I wouldn't want to reduce price to increase volume.
Second thing is they have growing demand, so when the demand is growing,
There's no need to even reduce the price. So you will have to keep interpreting. What do you mean by favorable price variance? What is the interpretation of a favorable price variance? Purchase price.
Since they are selling more,
Favorable purchase price. Purchase price. They have purchased inferior quality raw material. Favorable price variance means you are paying a lower price. When you pay a lower price, high probability that it could be a inferior quality raw. I'll have to keep focusing on the quality only. I'll have to somewhere link it to the quality. Favorable efficiency variance also to a great extent can indicate again issues with the quality of the end product, because if I give you 3 hours to do an audit report as compared to 2 hours, your quality of output will come down. You give me more time. If I take my classes for 100 hours vis-a-vis 50 hours vis-a-vis 20 hours vis-a-vis 150 hours, the quality will keep getting impacted at multiple levels. So favorable efficiency variance means my workers are producing the product in the time, in a better time than what is needed. Can be a quality issue. I'm not sure whether there's a quality issue or not, but can be a quality issue. Favorable fixed overhead expenditure variance again means companies cutting down on its expenses. I had to pay, your fixed expenditure will remain same irrespective of the production. So if you are having a favorable variance there, you are resorting to cost savings. When you resort to cost saving, again it is not in line with the, now the strategy, the quality strategy is called as product differentiation. You learn in chapter 1. It's technically called as product differentiation strategy. Whatever they have done looks like a cost leadership strategy. What is cost leadership? Is giving a product at a price which is lower than my competitors, of somewhat manageable quality, not the best quality. I'll give it to you only a manageable quality, not the best quality. So I give you a product which is of a manageable quality. Why do I give it of a manageable quality? Because I'm a cost leader. I'm a cost leader. So when Jio entered the market, it entered as a cost leader. Airtel used to be a product differentiator. It used to charge a premium as compared to other service provider. Apple is a product differentiator. MI phones, your Xiaomi phones, that is basically a cost leader. They try to attract you on the price side rather than the quality side. They say our products are at a lower price of a matching quality with the competitor. Their quality cannot be compared with Apple phones. That is not possible. But though I don't compare it with, there is a premium and there is a price difference which happens. Let's look at institute answer. But in your exam, you will have to interpret it like this. Interpretation is going to be critical. When I go to final detailed case studies, when I discuss some problems, I will tell you to write in the class. Some problems we will discuss only because I cannot give time to writing it down. Because today when I give an answer to you, my way of answering will be different. Tomorrow when I talk to you, again my way of answering is going to be different. So instead of me giving the answer, let's look at institute answer itself. Broadly, whatever I have discussed is what is going to be there. The way in which you write is different. I'm not bothered about it. What I would want is the quality of your discussion rather than the quantity of discussion in exam also. It will matter on the quality of discussion. Obviously, how many marks do matter to some extent. Now, government and high-end restaurants recognizes natural spice on the basis of its high quality of spices. Therefore, quality is the most critical success factor of natural spices. There are other factors which cannot be ignored, such as price, delivery, packaging, but all are secondary to the quality. So they have tried to give a comprehensive answer saying that quality is the critical one, but you also consider price, delivery, support, all of that. Support may not be that critical here, because support is basically after sales service. When somebody is selling spices, there is no after sales service. Your after sales service comes for something like mobile phones, laptops, so there it may be critical. So they say your important factor is quality, but you cannot ignore price, delivery support, attractive packing, etc. Now, whatever all these answers which I'm discussing, I'll separately give you all the solutions together at one place. So there will be a separate material which I'll give later on. I'm preparing it still. So it's not that I'm going to prepare a different answer. Answer is going to be from your practice manual only, but I'll just give it to you at one place so that it's easier for you to go through all of that. So there could be some 100, 150 questions on case study. Even when we did feedback and feed forward control, there when I gave some answer, some I said I'll share it. I'm yet to even share it in the group. I'll try to share it at the earliest possible time. But all case study type of question, whatever question I'm not discussing in the class, whatever question I'm not answering in the class, you will get printed answers. Printed answers is something which you can refer. If you have time, you try noting it down, try answering. That's up to you. Next, deliberate action of cutting price to increase volume indicates firm is expanding, and street shops which is price sensitive. Purchase price variance is clearly indicating that firm has purchased raw material at a lower price, which may be due to buying lower quality of raw material. Similarly, positive efficiency variance indicating cost cutting and stretching resources. You have different terms. As you keep reading multiple questions, some of the terms will get registered in your mind and you end up answering with those terms in exam rather than your own words. So terms like favorable efficiency variance indicates cost cutting and stretching resources. When you write something like this, it gives me a lot of comfort saying that you have good amount of understanding on these areas. Whether instead of writing like this, if I write say favorable efficiency variance means that the company is means that the laborers are put under intense pressure to produce the product and their production is happening in a time which is lower than the standard time, and this can indicate a quality issue. Is this and what I say different? No, both are same, but the way in which you put is different, and I would want more of a polished answer rather than the way in which I tell. So more of polished solution is what would be required. This is the issue you will face in any theory paper. Your paper like auditing, you know what is to be written, but you don't know the way in which it is to be written. You struggle in writing in quality words. So that is where it is critical to read some of them and be clear on those terms. Because if I ask you what is an audit, you will keep telling it to me. But if I ask you to write what is an audit in 4 lines, you will start struggling about writing what is an audit itself. If somebody asks you, you have been doing auditing till now, somebody tells you what is an audit, you will say that we check the financial statements and check whether everything is fine. Great. When you explain it to me, I will be very happy about it, because I also understand what is an audit. But if I tell you to write in exam and you write it like this, I'll put a 0 against it. That's all. I'm not going to give any marks. What is an audit? If you write saying that we check the financial statement, we check whether all the transactions are properly recorded, whether all this are done, whether the company has complied with all rules, regulations, whether this, that, all that if you talk about, nobody is going to give a mark. There is a proper definition of an audit. That is what is needed. So for costing, indirectly, you may have to start now getting used to, because it's going to be predominantly a theory paper. Costing new syllabus is predominantly a theory paper. So for that purpose, you may have to get used to. I'll tell you later on how do you remember all these key terms, what are the key terms to be remembered, how do we answer it, all of that will come later on. Next, it appears that the firm is intending to expand and street shops by not only reducing the price but also compromising its quality, which is opposing its current strategy of high quality. Now this line which you see now, you can end up writing in any case study. So you will have something which can be written in any case study. Management should monitor the trend of variances on regular basis and take appropriate action in case of evidence of permanent decline in not quality. That case study will talk about something else. In case the company's actual performance is deviating from its corporate strategy. Hence, customer feedback is also very important. So every case study, you may have certain lines which can be common to any answer. So those things I'll keep discussing as I do more and more case study. Clear? Any doubts on this? Clear? Now I'm not giving you time to note it down. Let's move to question 17. Go through 17 and first calculate labor rate and labor efficiency. Interpretation I'll take you through. Calculate labor rate and labor efficiency. Only those two. It won't be there in old syllabus book. Calculate the variances. Interpretation is something I'll take you through. Only the labor variances. Information is there to compute various variances. We just focus on labor variances. It's a single labor, multiple labor. Single labor without idle time. SR into SH, SR into AH, AR into AH. The standard rate was 8. Actual rate I'm not writing, I'm writing the overall multiplier. 24 lakh 42,000. Actual hours is 3 lakh. Your SH is always computed with the help of actual output, which is 1 unit takes 6 hours, 52,000 units will take 3 lakh 12,000. This is a very simple problem. I am just focusing on the interpretation part. 2496 24 lakh SR into SH, SR into AH, AR into AH. Labor cost variances 54,000 favorable. Rate is They want us to interpret only these two variances, labor rate and labor efficiency. Rate is 42,000 adverse, efficiency is 96,000 favorable. We have already done all of this, so I'm not explaining in detail. In case you still need an explanation, let me know. Okay, can we start now with the interpretation? Now there is a favorable efficiency variance and an adverse rate variance. We need to interpret them. Now how do we interpret?
Our
Laborers are
standard
paid
rate is
high while they are motivated higher efficiency.
Which one? Laborers?
Laborers are paid higher salary, so they are motivated and they provide a
They provide a better productivity. This will be the crux. As such, the crux is there will be only two things. One, laborers become motivated because of higher salaries. That is this combination. Laborers become demotivated because of lower salaries. That's the other combination. These are the only two possible combination. Now I'll tell you how institute would have written this. Now write labor rate variance. The company has an adverse labor rate variance. The company has an adverse labor rate variance. Has an adverse labor rate variance. Full stop. This could be because of the following reasons. This could be because of the following reasons. Because of the following reasons. Point number A. Company has paid incentives to its employees. Company has paid incentives to its employees. Company has paid incentives to its employees. Incentives to its employees due to improved efficiency. Due to improved efficiency. Next point. What I've said, due to the following reasons we have said, no? Okay, this is one. Next, second reason, the company could have underestimated the pressure of trade unions. The company could have underestimated the pressure of trade unions. Could have underestimated the pressure of trade unions. And had fixed a could have underestimated the pressure of trade unions and had fixed a lower standard rate. Full stop. However, the actual rate is higher. The actual rate is higher to accommodate the request of trade unions. The actual rate is higher to accommodate the request of trade union. To accommodate the request of trade union. Next point. The company might have been forced to pay higher wages. Due to general inflationary conditions. might have been forced to pay higher wages due to general inflationary conditions slash shortage of labor slash shortage of labor. I'm just trying to think what and all possible reason can be there for a company to pay a higher wage. So it could be because inflation is going up, my employees want a hike. It could be because I don't find number of employees in the market, so I had to pay a higher amount to attract them to my company. It could be because trade unions is extremely powerful in this organization and they are not allowing trade union or employee union. So you can change it as employee union, employee union. So the employee union is extremely powerful and they are not allowing us to work. They'll say we'll go on strike if you're not increasing the wages, or because they are efficient, I had to pay them higher amount. Next, the company has a favorable efficiency variance. The company has a favorable efficiency variance. Has a favorable efficiency variance. Has a favorable efficiency variance. And this could be because of the following reasons. This could be because of the following reasons. This could be because of the following reasons. Point number A. Higher wage rate would have motivated the employees. Higher wage rate would have motivated the employees. To improve its productivity. Higher wage rate would have motivated the employees to improve its productivity. Next point. The company could have underestimated the benefits of the learning curve. The company could have underestimated the benefits of the learning curve. I'll explain this in some time. Could have underestimated the benefits of learning curve, and hence the standard time. Standard time in bracket 6 hours per unit. Standard time can be incorrect, and hence the standard time can be incorrect. Either my workers became more efficient or my standard itself is incorrect. Learning curve is as you do one work again and again, you will keep reducing the time taken to do the work. You will have a separate analysis on this later on. So I wouldn't have analyzed this properly initially. Let's look at now the institute way of writing it. Okay, they have given adverse rate variance indicates that the labor rate per hour paid is more than the set standard. The reason, while setting standard, the current or future market condition like pending labor negotiation or cases has not been considered or predicted correctly. When they say pending labor negotiation, indirectly they are indicating about the labor unions or labor shortage. The labor may have been told that their wage rate will be raised or bonus will be paid if they work efficiently. That's what was the first point which we wrote. For efficiency, while setting standard, workers' efficiency could not be estimated properly. This may happen due to non-observance of time and motion study. What is time and motion studies? I check what you do for one entire day. So how are you spending your time? That indicates me how much time does it take to produce a product. So maybe the standard itself is incorrect. The workers may be new in the factory, hence efficiency could not be predicted properly. Again they are saying your standard is incorrect, you did not predict the efficiency properly. The foreman or personnel manager responsible for labor efficiency while providing his or her input at the time of budget has adopted conservative approach. This is technically called as budget slack. What is budget slack is? Now Bharadwaj Institute tells that they will pay me an extra incentive of XX percentage if we get so much pass percentage. What I'll purposefully do is, I'll say that let's fix the pass percentage at a lower number. Why I'll fix at a lower number? So that I achieve it and I get my bonus. So when I'm making someone responsible, so what this foreman is basically the person who is responsible for this. He will purposefully give a conservative number. Practically this happens. Practically lot of people, when your manager comes and says you, how much time will you take for the audit to be completed? You purposefully will tell a higher number. That's called as conservative approach or a budget slack. Why do you say that? Because later on you will be made responsible for it. So purposefully people will try to adopt a conservative approach. They are saying that could have also happened. The increase in the labor rate might have encouraged the laborers to do work more efficiently. So different possible reasons they are trying to find. That is what it is all about. You try to find out a possible reasons to any variance. Once you try to find that, it's easier. Just I think somewhere this will be there. Check, it's not. In your study material somewhere it is covered that what can be possible reasons for various variances. Let me look whether I have covered it in the material. Okay, now it's anyway already covered in the theory part, so maybe something which you can refer later on. It's in page 115. Why at all material price variance can occur, why usage variance can happen, why labor rate variance can be there, why efficiency variance, why overhead variance, why sales price, why sales volume, different possible reasons. You just need to read the reasons. It's not something which you have to exactly remember it, because it may have to be applied onto a case study. In that case study, what is going to come through? Just read through it. It's a normal reading. So maybe you can use it in an exam scenario. More important from a new syllabus point of view, all of this. Okay, I'm not doing this next question, which is on interpretation of sales mix and sales quantity variance in terms of contribution. What do you mean by in terms of contribution is, you will have to use margin approach, marginal costing. I leave it to you. You try to do this. Institute answer is already there. Try doing this. First, variance computation is the basis. After getting the variance computation, interpretation, you have to try to find different possible reasons to it. So that is something which you can refer in the institute material. First, calculate the variances and then refer to the solution. I'll move to the next part. Now, which is topic 53. We have done all possible variances now. All the basics of variances are done. We have done with cost variances, which is material, labor, fixed overheads, variable overheads, sales variance. All of that is done. Now you will keep seeing certain adjustments to all these variances. The first adjustment I'm going to see is equivalent units. So the first adjustment is basically on equivalent units. I'll explain what is this now. Now, when we solve a problem on variances, they have said calculate fixed production overhead variance in as much detail as possible. Topic 53 from the following information. Fixed overhead rupees, direct labor hours, output units. The company operates a process costing system. At the beginning, 42,000 half completed units. During the period, 680 were completed. 50,000 half completed units remain in stock at the end of the period. Now, it is not, you said standard quantity is calculated with the help of actual output. Standard time is calculated with the help of actual output. Everything is computed with the help of actual output, and the problem which you will face is the actual output is actual production. But in a company, it's not necessary that the production has to be fully completed. Some units can be under WIP. In process costing, you would have learned something called as calculation of equivalent units. So in this area, you have to calculate equivalent units. That equivalent units can be different for material, can be different for labor, can be different for overheads. All of this as part of your process costing. It can be different for material, different for labor, different for overheads. Now why that understanding is required is, my AO when I calculate SQ is going to be different. My AO when I calculate standard time is going to be different. My AO, when I calculate standard time for variable overheads, is going to be different, because all of this will depend on actual output, and that actual output can be different under process costing. Here this problem is only on fixed overhead variances. My starting point is calculation of equivalent units. I start with that and then I get to the balance part. Some part of reading of your process costing will help you in this chapter, because next part there are going to be comprehensive problems on this itself. So it will help you if you are a little bit clear on what happens in standard costing, what happens in process costing. So let's start. Working note 1, calculation of equivalent units. This will be there in your old book. Calculation of equivalent units. Calculation of equivalent units. 4 columns: particulars, units, DOC, equivalent units. Particulars, units, DOC and equivalent units. Now in process costing, how many units have been produced by the company? 6,80,000. Now this 6,80,000, some of them will come from the last year, some of them will be produced in the current year. What was the opening WIP? 42,000. Now please listen for some time. Opening WIP, units started and completed. When I say units started and completed, it is not forming part of opening WIP and completed. Closing WIP is technically units started but not completed. Units started but not completed. So you'll have 3 categories: opening WIP, units started and completed, and closing WIP. We have produced 6,80,000 units. How much was the opening WIP? 42,000. So started and completed is 6,38,000. Started and completed is 6,38,000. Closing WIP is how much? 50,000. Now for started and completed, entire 100% work is done in the current year. Entire 100% is. For opening WIP, something would have been done in the past year, balance is done in the current year. So the rule is 100 minus whatever is given in the question. What is given for opening WIP? Half completed units. It is not that 50 given in the question. If they say 60% complete, I'll take 100 minus 60. What we will take is 100 minus 60. So here I am taking 50%. In bracket for your understanding, you may write 100 minus 50%. Closing WIP, how much completed? Half, which is 50%. Equivalent units is units into degree of completion. Multiply it, put a total. That is the production. Production is not 680. Production is the total of equivalent units. Production is going to be the total of equivalent units. So the only thing is your actual output is 6,84,000. You can ignore everything else now in the question. Now the question is a normal fixed overhead problem where the production is not 680, the production is 684. Apart from that, all analysis remains the same chart, calendar, with calendar, without calendar, everything is going to remain same. So I'm not going to teach anything new. The only thing which I'm adding on is calculation of equivalent units, which technically I've learned at IPCC level. It's just kind of again revising it a bit, that's all. So we are not going to do anything new now. It's going to be same as fixed overhead what we have done. So the problem is like this now. The C below is removed. It is 684 and this is removed from the question. So the problem, now they say calculate fixed production overheads in as much detail as possible. Budgeted fixed overhead, budgeted labor hours, budgeted output, actual fixed overhead, actual labor hours and actual output. They have given you this information and now they want us to do, that's all. You don't have any other information in the question. It's like the normal set of problem which we have done. In fact, it is easier than the normal set of problem which we have done. Now, is this problem asking for calendar variance or do we have information on actual and budgeted days? No. So it's going to be a 4 columnar format. So let's open that 4 columnar format. The chart used to be SR into SH, AH, BH and finally AFOH. So SR into SH, SR into AH, SR into BH and the last item used to be called AFOH. SR into SH, SR into AH, SR into BH and the last item is called AFOH. Into SH or SR into AO. Conversion factor is something which you will have to be clear with. SR into AH or SR into SO into BH or SR into BO or BFOH. This part was expenditure, this was efficiency, this was capacity, together was volume. The formula is going to come from the chart. Any problem on fixed overhead, you will start with SR per unit, SR per hour. Then only we will start solving the question. First thing is SR per unit and SR per hour. Calculate those two things, SR per unit and SR per hour. First calculate SR per unit and SR per hour, that's the starting point. SR per unit is equal to, what is the formula? BFOH by budgeted output. BFOH by budgeted output. Everything will be readily available. 123 by 615.2. 0.2 and 1. SR per unit is budgeted fixed overhead by budgeted output. SR per hour is budgeted fixed overhead by budgeted hours. Nothing new here, everything whatever we have learned till now. The only extra point I have is AO is something which you have to compute with the help of all of those equivalent units given in the question. DOC equivalent units you'll have to do. Get to the AO, post that it's a normal, simple, straightforward problem. Any doubts on 0.2 and 1? Do we have SH or AO in the question now? AO is how much? So 0.2 into 6 lakh 84,000, because with output you will use SR per unit, with hours you will use SR per hour, SR per unit and SR per hour. 0.2 into 6 lakh 84,000. Then what is AH? 1 into 1,41,000. 1 into 1,41,000. BFOH? 1,23,000. AFOH? That's our problem is almost over. Get those variances. I don't have much to discuss now. The formula is going to come from the chart. The entire formula is going to come from the computation table and the chart. Chart will tell you the formula. For example, your expenditure variance is SR into BH minus AFOH. This part, this entire part, SR into BH minus AFOH. Your efficiency is SR into SH minus SR into AH. SR into SH minus SR into AH. Your capacity is SR into AH minus SR into BH. So somewhere the formula is going to come from the chart. You be clear on the chart. You need not remember any formula in standard costing. How much is the efficiency answer? Adverse. And your capacity is 9,000, no? Sorry, 18,000, correct. 18,000 favorable. This is favorable then. I have done a mistake here. Cost is 7,300 favorable. Expenditure is 6,500 adverse. Volume 13,800 favorable. Efficiency 4,200 adverse. Capacity 18,000 favorable. clear? With that we'll end today's session.